Hello students, today we will discuss a previous year question that came in the Business Studies exam held by the Assam Higher Secondary Education Council. So the question that we have here is, what is a share? Write the features of equity share. So the answer that we have is, what is a share? As the definition says, a share is a unit of ownership. A unit of ownership in a company. It represents a claim on the company's assets and earnings. For example, when a person buys a share, they become a shareholder and part owner of the company. So, what is a share? When the owners of a company invest certain amount of money, and in a company mostly the capital is invested in the form of shares. So, and what is a share? It is a unit of ownership. Suppose if we visualize ownership of a company, suppose the ownership of a company, so if we visualize, so it looks something like this. In this part, what is a share? It is just a unit of their ownership. So, what is a company? Shares are basically the capital invested in that company. And who invests capital in a company? The owners. So the company shares, that is also the capital invested. And what is a share? It is a unit of that ownership. So anyone who buys shares or anyone who invests in that company, in a particular company, in the form of shares, they become the shareholders of that company or part owners of that company. Here it is mentioned shares are of two types, equity shares and preference shares. What are equity shares? Equity shares, the shareholders of those shares are the actual owners of a company. However, preference shareholders are not so. So this was the concept of a share. It is a unit of ownership. And what does it mean? When someone buys that unit, because again it is shares, the ownership means what? A capital invested in monetary. If we have to speak in monetary terms or in business terms, the ownership means the capital invested, and a unit of that capital invested is known as share. So again, a share is a unit of ownership in a company, and it represents a claim on the company's assets and earnings. So anyone who holds a share has a claim on the company's assets and earnings. So this was the concept of a share. Next we move to the features of equity shares. The features of equity shares are, and what are equity shares? As I said earlier, equity shares are those shares, the shareholders are the actual owners. The shareholders of equity shares are the actual owners of a company. So we will understand better through the features of the equity shares. Here, first feature we have is ownership rights. So anyone who holds equity shares of a company, they become the owners or part owners of that company. So what it is said, the ownership rights of that company gets transferred to that shareholder. So as it is said, equity shareholders are the real owners of a company. They contribute capital and have a claim on the company's assets and profit. The equity shareholders contribute capital to the company, and they have a claim on the assets and profits of the company. Example here we have is equity shareholders vote on mergers, acquisition and board appointments. Because equity shareholders are the owners of a company, they vote on important decision making. The next feature we have of equity share is voting rights. Because the equity shareholders are the owners of a company, they enjoy voting rights. In any important decision making, a company holds board meetings or shareholder meetings. In those meetings, every equity shareholder has the voting rights. They can vote on important decisions. As it is said, equity shareholders have the right to vote in company meetings and elect directors. It gives them control over the company's governance. So the equity shareholders also have a certain amount of control in the company's governance. The next feature of equity shares are dividend not fixed. In case of equity shares, the dividend is not fixed. Why so? Because the dividend depends directly with the amount of profit earned by a company in a particular year. So if a company earns more profit in a particular year, the equity shareholders will get more part of that profit. But if in the next year the company earns lesser amount of profit, the equity shareholders will get lesser amount of part of that profit. That is why the dividend for equity shareholders is not fixed. So as it is mentioned here, unlike preference shares, equity shares do not carry a fixed dividend. Dividends depend on the company's profits and board decisions. So the returns can be high in profitable years but uncertain in lean years. So if there is no profit, the equity shareholders might not get any dividend as well. But if the profit skyrockets, so if the profit is very high in certain years, the equity shareholders will get very high dividends as well. And now the next feature that we have here is residual claim on assets. So if suppose a company shuts down, before shutting down, the company will value its assets and liabilities, and all the liabilities, all the payments that a company has to make, suppose to the creditors of the company, then the preference shareholders, the company will make all the payments, and at the end, the residual claim, at the end, whatever asset is left, whatever the value of asset is left, that goes to the equity shareholders. That is why this is a feature of equity shares, that is residual claim on assets. In case of liquidation, what is liquidation? When a company shuts down and starts valuation of its assets and liabilities. So in case of liquidation, equity shareholders are paid after all liabilities and preference shareholders are settled. They bear the highest risk but also enjoy the last claim on remaining assets. So equity shareholders get the remaining assets after liquidation. So these were the first four features of equity shares. We have four more features here. Again, the fifth feature of equity share is risk and reward. Because equity shareholders are the owners of a company, they bear the highest risk, and when the company earns good profit, they also get the reward accordingly. So equity shareholders face the highest risk but also have the potential for maximum reward through capital appreciation and dividend. The equity shareholders have the highest risk, but they also have the potential to earn the maximum reward. It becomes kind of a reward for their risk. So this is a feature of equity shares, risk and reward. That is, they bear the highest risk and they also has the potential for getting the maximum reward. The next feature is permanent capital. So equity share is the permanent capital of a company. So when a equity shareholder buys a share, that money is invested for lifelong. That is, that money cannot be returned to the shareholder. So that is why it is called permanent capital. Equity shares represent long-term capital. They are not repaid during the company's lifetime. So as I mentioned, when a shareholder buys an equity share, he will not be paid the amount again. That is, it is a long-term investment. He will only get dividends out of that capital invested, but he will not get the whole sum in return. That is why it is known as permanent capital. It is one feature of equity shares. The next feature is transferability. Equity shares can be transferred. Those shares, one shareholder can sell his share to another shareholder. That is why equity shares are transferable. So it becomes a feature of equity shares that they are freely transferable on stock exchanges, allowing shareholders to buy or sell them easily. It offers liquidity and flexibility to investors. And the last feature we have is no fixed return. In case of equity share, the return is not fixed. Returns on equity shares vary based on company profits, market conditions, and dividend policies. As I said, equity shareholders get return. Mostly those returns are dependent on the profit. If in a year there is no profit, the equity shareholders will not get any dividend. But suppose in the next year the company earns very high profit, the equity shareholders will get the high amount from that profit. That is not the case in other share. That is not the case in preference shares. So the return is not fixed in equity shares. So these were the features of equity shares. What are they? Risk and reward, permanent capital, transferability, no fixed return. They have ownership rights, voting rights, dividend not fixed, and residual claim on assets. These are the features of equity shares.